Hey, this is Alex Astley, and it's episode number 117 of Money Hacks, summer 2024. Today's topic is about inflation, interest rates. Is everything costing more, and how do you handle the higher cost of goods and services? I'm sure for those who've been following the financial markets, following the economy, you've probably heard that inflation is coming down. And it's much lower than it was a year ago. And while that's true, inflation has been now for about 9 or 10 months hovering in the 3% range. Not quite where the Federal Reserve wants to get it, down to about 2%. Remember that what that means is a 2 to 3% growth over the cost of things the prior year. So it doesn't mean that goods and services are getting less expensive. It just means that the increase in cost of those goods is going up much slower than it was before. The real challenge that a lot of us face is that certain goods, specifically things like groceries, eating out, have gone up dramatically. In fact, there was I posted went somewhat viral on social media of somebody that looked at their food costs from a few years ago, I think 2021 or 2022, and it was like $140 at the grocery store. Now today, nearly $350, 3 years later. So $200 of increase in groceries, well above the rate of inflation. But it just shows you the kind of this year-over-year increase in costs that we've been experiencing, to a point that it's been a strain on a lot of cash flow and budgets for individuals and families. So what can you do about it? I mean, obviously it's challenging to make wholesale changes, but I do think, as always, we're big proponents of being focused around your cash flow, having a good understanding of how much money you have coming in on a monthly basis, and then where that money is going, where you're spending the money, and ensuring that it aligns with your financial goals and priorities. And for a lot of households, groceries, food, eating out, those sort of things, even rent and housing costs have all gone up over the last few years and are now taking a bigger piece of somebody's monthly budget. So certainly trying to ensure that you're continuing to keep up with that in terms of your earnings potential and earnings growth is important. But that usually happens on an annual basis during performance reviews, merit increases, and promotions. So in the short term, the focus is really around understanding how those increased costs impact your budget. Are there things you can do? Are there compromises you can make to be a little more focused on your cash flow? I know it's tough to do, especially in periods like summer. People tend to, eat out more, maybe go out, have family vacations that increase costs as well. We are seeing that rate of inflation slow, which is a positive, but still after a couple of years of higher inflation, it's been challenging. So if there are things that you have thoughts on or questions on, feel free to drop them in a response or in the chat to this video, or if there's anything we can do to help, feel free to reach out to our team. Thanks. See you next time.